This is Take-Two on the monthly chart, and as you can see, price is sitting within a resistance support band at the $140 level. If I draw a trend line, you can see price is also bouncing off that monthly upper trend line. However, if you scroll down to the weekly chart, what you can see is that the momentum is somewhat waning, and or this just could be the pullback before the continued impulse higher. Before we continue with the analysis, let's look at this article, and it is coming from The Motley Fool. Is Take-Two Interactive stock a buy now? So shares of Take-Two delivered outstanding returns to investors over the last decade following the blockbuster sales performance of yours truly, Grand Theft Auto 5, which was released in 2013. And yet, over the last 3 years, the stock has fallen 11%. The stock has rallied 36% so far this year, which can largely be attributed to management's guidance for their fiscal 2025, when bookings are expected to jump to $8 billion, or 45% over estimates for fiscal 2024. While management has several titles in development, smart investors know there is one game that can pull this level of sales in a single year, and that's GTA. Take-Two's Rockstar Games studio, which produces GTA, already confirmed that it's working on a new entry in the best-selling series, so an official announcement of a new installment could come very soon. However, investors shouldn't buy a stock based on future growth expectations alone. It's equally important to see what expectations are already implied in the stock's valuation, using price to sales ratio or price to earnings. The stock currently trades at a lower PS ratio of 4.32, but on a price to earnings basis, Take-Two is expensive, trading at 44 times the consensus earnings estimates this year. The higher premium could limit the stock's gains moving forward. Investors also should factor in the possibility of game development delays, which are typical in the video game industry, as well as chance that sales don't quite live up to expectations. Alright, so with that said, going back to the charts, although again price is pulling back, it is touching that uptrend on the monthly chart, uptrend line. Your moving average is still pointing upwards. So what we have here is again a potential just the pullback before prices potentially move higher. You do have some short-term support down at the 135 level. Again, looking at current price going up and to the left. You see a lot of trading between current price and what was all-time highs at the 210 level. Alright, so let's go down to the daily chart. The next catalyst is going to be in early November. That's when they announce their earnings. You can see that the 200-day moving average is still moving higher, so that's good news. You can see a golden cross. That's where the 50-day moving average crosses over the 200-day moving average. However, your short-term momentum moving averages are starting to point down. Again, this could just be representing just the pullback from the impulse move higher. The chart suggests this is the line in the sand, the 135 level. You get significant closes below the 135, but also this uptrend line on the monthly chart, and prices could and may fill this gap, at least get to the 125 level. That's where the 200-day moving average sits. At the moment, it's a no trade setup. So until next time, till we get a breakout either to the downside or the upside. Just stay on the sidelines. Thanks for watching. Subscribe. Please like the video.